Welcome to your next F6 Express recording. Our next section is employees tax, and provisional tax. Employees tax, which was divided into two sections, not anymore at the moment. We're only interested in PAYE. And our PAYE is calculated on the employee's balance of remuneration, which is the amount he actually earns after deducting any qualifying contributions made to a pension or retirement annuity fund, a medical scheme, and any donations made. Part-time, temporary, and casual employees, you will have to deduct a flat amount of 25% on part-time employees as long as they earn more than the daily limit of 261 Rand per month. An example of balance of remuneration is Mr. K, who is 55 years old and unmarried, so he is alone. He receives a monthly salary of 25,000 Rand and contributes 1,750 Rand to a pension fund and 1,000 Rand to a medical aid scheme. You need to calculate the employee's tax that must be withheld. Salary is 25,000 Rand. 7.5% of 25,000 is 1,750, which is the amount he paid. If he paid 4,000 Rand, you will still only have 7.5% of 25,000 Rand. His medical aid contributions would be limited to the amount that SARS allows, which for the 2012 year is 720 Rand, and his balance of remuneration is 22,530 Rand. The annual equivalent is that amount multiplied by 12. You go to your tax tables. You will work out the normal tax payable less any primary rebate, and you will get the employee's tax for the year. Employee's tax for the year divided by the number of months, which we all know is 12, will be the amount actually paid. If he has worked for less than 12 months, remember it will be less than 12. This figure will be less than 12. For directors of private companies, they have a formula which is Y is equal to T over N, where Y is the deemed monthly remuneration, T the remuneration paid in the last year of assessment, and N is the number of completed months that the director was employed by that company during the last year of assessment. Then we go on to provisional tax. Provisional tax is anything other than remuneration that you earn, you will pay provisional tax on it. So there are two obligatory estimates, which is the first payment and the second payment. If you find that you have paid less than the required amount, you are allowed to pay a voluntary third payment. The first payment, let's look at the 2012 year of assessment. The first payment, the 2012 year started on the 1st of March 2011 and runs until the 29th of February 2012. Your first payment is due 6 months into that year, which is the 31st of August 2011. Your next payment is due on the 29th of February 2012, and if you find that you have made an error in your calculation, you are allowed to make a third payment at the end of September 2012. The first payment is based on half of the amount payable, either estimated or basic amount, less any employee's tax already deducted, less certain amounts of foreign tax credits that are available. Second payment is based on the full amount of tax payable for the year based on an estimate, less the first payment, less any employee's tax, less any foreign tax credit. They go on to define a provisional taxpayer as a person who derives income that does not constitute remuneration as defined, a company, or any person who is notified by the Commissioner of SARS that he is a provisional taxpayer. They work on a two-tier system where your taxable income is less than R1 million. The estimate can be based on the lower of the taxable income for the year or a basic amount. Where the actual taxable income exceeds R1 million, the estimate is based on a calculation of the taxable income for the year. However, should you make an incorrect payment or a late payment, then you will be slapped with interest, penalties, and additional taxes. Retirement and lump sum benefits. Retirement lump sum can be divided into lump sums from employers where the gross income received is included in gross income, and lump sum from funds where the net amount is included in gross income. And any calculation of severance benefits, any amounts that do not exceed 315,000 Rand are taxed at 0%. Anything over that goes up 18, 27, and 36%. That is your recording on employees' tax and retirement benefits. Thank you so much. I will see you at the next